Yo, 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 welcome back to the channel. It is late night Dave. This is my second time trying to record this because Simba hopped on my computer and turned it off in the middle of the video. And it was actually a really good video. You're going to miss out on that because of Simba. So in case any of you guys defend Simba in the comments or something when I get angry at him, that's why I am kind of getting angry at him. But if you don't already, get you a little drink and have a sip with me. I have some bourbon. It's not anything special. It's like it's a Knob Creek 9-year bottle. You can find it in any grocery store, but yeah, just have a little sip with me. Smells delicious. It really does smell pretty good, though. I love bourbon. All right, let's get into some price action. So, looking at the ES1 chart and SPY chart, we're going to give an update going into tomorrow because tomorrow is a big day for us. Tomorrow, being Thursday, is the day that, or the beginning day, like Thursday, Friday of this week, where we were expecting us to have a big tumble in price action on these major indexes, and see SPY likely get sent to, oh my goodness, why is this so dragged out? Likely get sent to around 382 to 385. And ES1 futures, mini futures, get sent to, let's see, what is this price? 38.36 to 38.63. That sort of range is where we're looking. And the reason that we believe this is because we are looking at the apex of this downtrend and this green uptrend. And we have said that these sorts of trend apexes tend to act as a form, like a magnet, right? Price is generally drawn towards it. And so if we can identify whether or not we think something is distributive or accumulative in nature, which, you know, we can't be 100% sure about whether you're accumulating or distributing within a range. But there are some telltale signs that we can use, and we'll talk about those in the video, just so that I can give full clarity on my perspective of this. Is if we can identify distributive structure with a good apex, then it will give us a good idea that it's a likelihood that price will travel to that apex, to or around that apex, right? So it doesn't have to actually nail, I mean, oh my goodness, too much bourbon? No. Nail the apex, but you know, you see price kind of round out, bounce around in this sort of zone in that way, right? As it finds support. That's pretty much the play here, right? And this is how we're beginning to time markets a little bit better on the channel. Generally speaking, we've had pretty good day-to-day technical analysis, and we have had a lot of successful more macro calls. But I think that really we're figuring out how timing is going to play out in the market more frequently, which obviously can be very lucrative, especially if you're trading options per se. This channel is not really about trading as much as it is about analysis, but make sure that you are understanding the price action, whether you want to be an investor or a trader. These are very useful tools. Or if you just want to pay attention to the market so you know what's going on, I think it's a really good tool to have. All right, anyway, so what's the update? Look, today was a theta burn day and a half, right? Today, and it's not very surprising, today they wanted to burn people's options up. And why would they want to do that? Well, because a lot of people are speculating on what's going to happen going into the jobs report on tomorrow morning. So, and especially they had the Poland war, the missile strike happen, and all of these volatile things happening within the market after the PPI report. You had the missile. So now a lot of people are in their options. They're like, yeah, it's going to go up, it's going to go down, whatever. So they're like, no, it's not going to do either of those, and they're going to burn everybody's options to hell get people shaken out of their positions so that they can get cheaper options positions and create another volatile move so that they can make money. That's what they do, okay? They being Composite Man. You can Google him if you don't know who I'm talking about. So, after we have talked about all of that, I still believe the same thing that I believed before. I believe that you are in a distributive price structure. I believe that price will take a journey down to these lows that I'm discussing, and I am relatively bullish after you visit this lower section of the chart. But I think that you're just very overextended from this uptrend, right? It's been a long time since you visited this uptrend, which is a healthy uptrend. It's not a bad uptrend. It's not an unhealthy move. But I'm not seeing anything here on either one of these charts that's very convincing to me in the form of bullish continuation. And I'm not saying it's impossible, right? I've said that over and over again. Please be responsible in your positioning in this thing, because anything can happen. Anything can happen. But my idea is that this is a distributive price structure, okay? And let's talk about what distribution means, right? This is what I talked about in the other video before Simba messed up my video. So I want you to look at this price structure, right? And just compare it to the schematic that I'm sharing on the screen here with you, right? This Wyckoff distribution schematic. I'm sure that if you've been following the channel as long as I've been posting, a lot of you guys have, you're familiar with this schematic. Now, tell me, does this look similar to you in nature to this, right? Look at how price is holding relatively high within the range. It's really spiking down quickly and then popping back up, right? Spending a lot of time at relative highs. If you were to draw a line in the middle of it, right? Where are you spending most of your time? You're spending most of your time above this line. Whenever you go below, you're spending very little time below the line, right? What this is doing is it's making retail traders, for the most part, and maybe lower-end institutions or whatever have you, what have you, they are broadly familiar. Retail traders, retail investors are broadly familiar with market events. They're not paying attention to the analytics. They're not paying attention to many of the details. They open their Robinhood app, their Fidelity app, whatever. They look at the price. And over the course of time, they say, wow, you know, you had this really big move up here. I know that price previously was at $350 for SPY, whatever. And now, you know, just a few months later, you're way up here. You're closer to $400, and you're kind of just hanging out. And even after you had this missile strike, you're still holding relatively high. This is a sign of strength within the market to the average retail trader. That's how they're seeing this, right? Because they just keep opening their screen and they keep seeing the price. They keep seeing that the price is higher. And this worked 100 years ago, right? You go you talk to your broker, the price is still relatively high. The opposite of this is accumulation, right? When price is relatively low for the recent range. Oh, man, it's way down here at $360. It's way down here at $350, $340. You don't want to buy that. It's spent weeks here. It's going to go lower again, right? Everybody is very bearish. Everybody is convinced that the next big move is going to be lower. That is essentially, and again, look, I've said this over and over again on the channel, so let me just refresh you guys. I will say, as of right now, this structure looks generally accumulative, and it aligns with the narrative. It aligns with the kind of ideas that I see spread in Twitter circles and things of that nature. I see people saying, oh, we're still going to see lower lows. And I'm not saying that that's off the table by any means. That's not what I'm saying. But what I am saying is, this is the environment where bears get trapped, right? Bears get trapped in this environment because it's so common sense. It's such a common talking point right now to say, yeah, you know, we're going to go up to $415. I have seen this 1,000 times. Yeah, we'll go up to $415, but then we're going to come back down and we're going to make new lows again. Have you seen that? If you follow me on Twitter, if you follow YouTube, personalities that talk about the indexes. Have you not heard that sort of speech? I'm sure you have, right? And look, I'll be honest. I've had similar thoughts. But you do have to acknowledge that that will likely be the idea until it's not anymore. The truth is only the truth. And we've talked about this. We've talked about how, you know, what's bullish about the market right now? There's nothing to be bullish about. So why would there be new highs? How could you say that there are going to be new highs, right? And then the CPI report comes out and it beats expectations. Oh, the news is bullish suddenly. Oh, suddenly the PPI report comes out. It beats expectations. Wow. Huh. Well, guess what? You have already missed out, right? By the time both of those reports came out and they beat expectations, the indexes have moved 16%, and your favorite ticker that you were waiting to buy at new lows has moved much more than that, most likely, right? So just acknowledge that I'm telling you, price action is the way to know what is going to happen. That if you can master price action and understanding price action, you will have a much better idea of the near term, right? The weekly, monthly direction of this thing. And yeah, fundamentals matter. I'm not saying that they don't, but what I am saying is by the time you know about those bullish fundamentals, it's likely too late, okay? Everything is priced in. Don't think that you're the smartest guy in the room. That's all I'm saying. So, again, I don't even know if I've said this yet, but I am expecting that this holding relatively high within this range, this distribution, in my opinion, that's what this is going to play out. And in the next, I'm talking about by the end of day tomorrow. And don't freaking FOMO into any options or anything like this and do anything crazy. And I do not want to hear anybody come out of this and say, you were wrong and I lost so much money because of you, because that's not my fault. If you didn't play this responsibly, I preach responsibility all day, every day on this channel. You guys know this. If you do anything stupid and you lose a bunch of money because you followed some guy on YouTube or Twitter and thought that you were gonna bet your life savings on something, that's stupid. And don't come here and talk to me about that. Okay, I'm not saying that any of you guys do, because I've probably never had anybody accuse me of that I can think of. But just I just want to say that because I hope that I come off as I'm being educational and I'm trying to show you guys how we can project a move, right? So what am I expecting? What I'm expecting is overnight with futures, you're going to roll up higher, probably test this trend line, right? And then probably start to kind of hang around here. The jobs report comes out at 7 or 8 a.m. I am expecting a jolt down as a result of that, okay? Then you're probably going to bounce. You're going to retest this kind of level. You're going to retest here, right? And then you're going to get rejected down. Going into, the evening, right? Afternoon, you'll probably pop back up in the future session. And I'm expecting that you get pushed down hard again, okay? Early Friday. I'm expecting tomorrow morning can be kind of mediocre, nothing really crazy, but I am expecting things to evolve rapidly going into the afternoon. That's just my personal opinion, okay? I think that this apex is a powerful apex. It aligns with the 707, which is the key Fibonacci level that we've been watching for months on this channel and has been incredibly effective at predicting short-term and long-term levels of support and resistance. And I think that this thing just needs a pullback. That is my opinion. And I do think that this pullback will be relatively healthy, and you will bounce out of it, and you will continue to new highs. I do believe that as well. But I am very confident, okay? I am 70% confident that this plays out in the manner that I'm showing here, give or take, okay? I am expecting low 380s on SPY. Okay. That's what I'm expecting. All right. So I don't know what the news will say. I don't know what it'll be or whatever. Right. We had our PPI report, and then we had missiles. And then all of a sudden it was like, dude, I'm telling you, whenever this PPI thing happened, I sold my calls that I swung overnight that day immediately, and I'm looking at the price. I'm like, bruh, how is it gonna get to $385 from $404 in like 3 days? And then like later on that morning, missiles in Poland, and I'm just like, all right, dude, composite man finds a way. You know what I'm saying? So yeah, that's pretty much it. Hopefully you guys enjoyed the video. Hopefully you enjoyed kind of the talk that we had about distribution. Oh, let's talk about a famous distribution. I did that in the last video. That's when I got cut off. Let's talk about that. This is a distribution that you are probably familiar with because it happened really recently. I know I was heavily paying attention to Bitcoin in this phase, and this is actually when I got originally introduced to Wyckoff theory. So this is, 2021, the Bitcoin bull market in 2021. Again, let's pull up that schematic here. This is a bonus. Let me take a sip of my bourbon while I pull up the schematic. Take a sip as well at home if you're still sipping. Bonus content. Bonus. So again, same sort of price structure, right? You have your buying climax here. This is a daily chart. You probably have something built in here, like where's my text? Oh, here. Like an automatic reaction here. Sell test here. A sign of weakness here. An up thrust here. An up thrust here. And an up thrust after distribution here, which is that last real low volume ride up here before volume steps in from sellers again. You have another sign of weakness. And then LPSY, which is your last point of supply. And then another LPSY. And then markdown. All right, so let's talk about the I just briefly, we're going to talk about, you can see here how we're pretty easily lining out this chart here. Lines up really well with this distribution schematic. Again, of note here, if you were to draw a line through the middle of it, price is hanging relatively high within this range. And you're convincing people that this thing is worth more relatively than it is to you, right? You're trying to sell people Bitcoin. That's what you're doing. You're saying, look, it's so valuable. It just stays so high in this range. In retail, normal people that I would talk to that were interested in crypto, they'd say, man, look, we're holding up in $50,000, $60,000. We're gonna ride up into the sunset. Next is 75K. No question. We'll be at 75K in a few weeks. I'm telling you. Every crypto YouTuber, whatever, right? In reality, what's happening is, because this price is holding so high, so unnaturally high within this range, it's making retail think that this thing is more valuable than it actually is. And Composite Man works in mysterious ways. He uses news to help his narrative flow through. Remember whenever he said that Tesla was buying Bitcoin, right? Do you remember that? That was back in January or February. I was in Nashville when they announced it, I remember. And then, you have this big sell-off. Maybe that was back here, whatever. And then some more good news. And everything is holly jolly, Ethereum is this evolving technology, and you can have all these different apps run on it without any, without any centralization and everything, and all this utilities coming out, and and then boom, you have another sell-off, and then you get up here, and look, retail's still going. Oh yeah, dude, that was nuts. We came down, we tested 47,000, but look, we're back up at 50, 60,000 again, man. We're going to 75. It was just a wave down, and then suddenly. There's like, I remember it happened back to back. I think it was the China news first. Like, China made Bitcoin illegal for like the 50th time or whatever. And then it kind of bounced up here. It was hanging out for a couple days. And then Elon comes out and says, Tesla will no longer be accepting Bitcoin because it's bad for the environment or whatever, which, did he not research that way back here whenever he bought it? Or you know, did Tesla not look into the economics of this? Or and then it comes back up, bounces. Oh, that's no big deal. We'll be all right. And then boom, absolutely tanks. And this was actually the day before Luna was born. I remember. I'll never forget. And that's your markdown phase, right? So, that is how it works, man. The news is so good at the beginning, and then, you know, it starts to get a little weird towards the end. You know, news starts to get a little bad, and then it gets really bad really fast. And this happened on a much larger time frame and took a lot more time to occur. But these schematics play out locally, right? Like, you had an accumulation here, a distribution here, and even within this accumulation, you had an accumulation, a distribution, an accumulation, and a distribution. Right? Holding relatively low, holding relatively high, holding relatively low, holding relatively high, holding relatively low, holding relatively high. This is the ebbs and flows of the market, right? This is how institutions are able to accumulate and distribute assets and increase their bottom line over the course of time, which at the end of the day, all they care about is liquidity, which is their balance sheet. That's all they care about, right? So what is your total account value? When you look at whatever app you use, Fidelity, Robinhood, Webull, whatever, it gives you a net account value, right? That accounts for your cash, your assets, right? Your stocks, your options, your whatever. You get that total, right? All they care about is increasing that. And the best way for them to do that is to buy and sell assets at good times, be in cash when it's the appropriate thing to do, be in assets when it's the appropriate thing to do, be in bonds when it's the appropriate thing to do. And they're constantly pulling these levers and making this happen. And they're telling their buddies at the news, or they're making whatever news occur, whatever. However they do it, at the end of the day, all they want to do is increase the bottom line. That is Composite Man's goal. That is how the market works. Whether you like it or not, whether you think it should be illegal, whether whatever, it doesn't really matter, because that's how it is right now. And I guess you can vote for somebody or something if you want it to change, but if you don't think that they're on the side of whatever this is, then I don't know. Anyway, hopefully you had a great night. Hopefully you enjoyed the video. Hopefully you enjoyed the little ranty nature of this. This is a little bit long of a video, longer than I was expecting. Have you another sip out of your Glencairn if you're drinking bourbon. This is, I don't know if I said, yeah, I'm pretty sure I said in this video that it was a Knob Creek, not the first video, but hey, what are you going to do? I mean, it's been 20 minutes, dude. So I'm not wasted, dude. It's my first one, okay? I'm okay. You guys have a good rest of your night. And I guess we can sing a song. Let's sing a song. Let me pull up my Spotify. Maybe it'll give me an idea of what I should sing. Because I don't want to sing that. I've sung that too recently. I see Nothing Was the Same by Drake. I've been really messing with Drake lately because of the new 21 Savage and Drake album. I really don't feel like singing any of these songs. What the Okay. Okay, no, I'm not going to sing anything. I don't feel like singing. You know what? I'm sticking by it. All right, look, tomorrow, I think that the most likely thing that occurs is maybe you kind of have this floaty, oh, yeah, everything's so good. Yeah, we're fine. Just don't worry, you know? Again, look, I mean, do you think, to reference, okay? So reference. Just to give you an idea of what it would look like also, because I think that this is a fair question to ask. Well, Dave, what is it supposed to look like if it's going to go up? If it's going to continue to go up after it goes up really fast like that, right? You know, this right here, you know, like you push up here, boom, you have this distribution, it plays out, right? You're still holding relatively high within this range, but you can see that you're hanging low within here, boom, and then you are reaccumulating here, you're hanging low here, you get new highs, boom, you hang low again, boom. That's how you get highs. Okay. Maybe that was a bad example. Maybe you know what I'm saying. Look, basically, look, take this right here. If this right here, instead of looking like it does right now, if it looked like if it looked like this, then I'd be like, yeah, take this last bar off. Why don't they make that a thing where you can just take one bar off? Okay? If this reaction would have been more like this, right? I'd be like, oh yeah. I mean, you'd probably drag out a little. Oh my God. Probably drag out a little bit more like this. I would be like, yo, dude, this thing looks like it wants to like go crazy, right? Doesn't that look at this looks so much better? Does that make sense? All right. That's all I'm saying. All right, have a good night, dude. I gotta go. I'm gonna go like get another one of these or something. You have a good night, okay? Be safe out there.